Vijay Mallya, a scam for 9,000 crores, he flew to London and still there. Nirav Modi, a scam for 13,500 crores with fake letters of credit involving Punjab National Bank, he fled to UK and still there. Mehul Choksi vanished to Antigua, then Dominica, a mystery that reads like a spy thriller. And then comes Harshad Mehta, the original Harshad Mehta, 1992, 5,000 crores rupees scam, manipulated an entire stock market. We loved him so much, we made a web series about him. And then ABG Shipyard, around 22,842 crore rupees scam. Bank fraud so complex that it took investigators 8 years just to file charges. And now I want all of you to hold all of these numbers in your head at the same time. Please add them all up. Every rupee Vijay Mallya ran away with, every fake diamond Nirav Modi used as a collateral, every forged document Harshad Mehta ever signed, the total somewhere around is around 65,000 crores. Give or take, it's around 65,000 crores. And now I'm about to tell you about one single company, a gold jeweler firm from Bangalore whose alleged financial misrepresentation is 15 lakh crores. Now this is not a misnomer, it's 15 lakh crores, 230 times the size of a Vijay Mallya's fraud. And the man at the center of it, he was still giving interviews to NDTV last week. Now you must be thinking that this is all about stock market, this is about rich people. What do I have to do with this? And why should I care? See, let me tell you exactly why it should matter to you. There is one institution in India that every middle class family trusts with their savings more than any bank, more than any mutual fund, more than any fixed deposit. And that institution is known as Life Insurance Corporation of India, LIC. Now your parents probably have a policy. Your grandparents definitely did. Millions of Indians have been paying LIC premiums their entire working lives because they believe that money is safe, sovereign backed, it's responsible. Now please listen to this. LIC owns approximately 10.8% of Rajesh Exports Limited. Now while mutual funds, the professional who track this stuff every single day, were quietly reducing their exposure to the company, after SEBI began its investigation in late 2024, LIC was sitting on its stake. LIC was not selling, not questioning publicly, just sitting, and the stock kept climbing. It hit up to 239 rupees as recently as 22nd December of 2025, 6 months ago. By June 5th of 2026, the day after SEBI dropped a 109-page bombshell, the stock was at 98 rupees. A 90% fall from its all-peak time. Tens of thousands of retail investors, pensioners, salaried people who put their savings into a Fortune 500 ranked Indian company because it looked rock solid, they are sitting on losses that they may never recover from. And this is not an abstract scam. This is actually your money, and this is your family's money. And if you want to understand how it happened, you need to go back to the very beginning. And the year is 1989, and the place is Bangalore. Now two brothers, Rajesh Mehta and Prashant Mehta, were from a very modest Jain family. They start a gold jewelry manufacturing unit. 10 workers are there, there's a garbage workshop, and that's the entire operation. But here's the thing about gold in India, it's not just a metal, it's an emotion, it's weddings, it's inheritance, and it's the one asset a rural family trusts more than a bank. India consumes more gold than any other country on earth. Demand is historically hovering around 900 tons per year, and if you can manufacture and export Indian style jewelry, you are swimming in an ocean of demand. Now Rajesh Mehta understood this early, and by 1992 the company was exporting to UK, Dubai, Oman, Kuwait, US, Europe. Revenue was around 20 million rupees, and by 1998 it hit around 1.2 billion rupees. The company listed on the Bombay Stock Exchange and the National Stock Exchange. They built India's first organized gold jewelry manufacturing facility, India's first R&D lab in the jewelry sector. The Mehta brothers weren't just gold traders, they were building an empire. And then came the move that transformed everything. The move that would a decade later become the centerpiece of India's most jaw-dropping regulatory investigation. On July 2015, Rajesh Exports announced a $400 million all-cash deal to acquire Valcambi SA. Let that sink in. $400 million all in cash from a Bangalore company that started in a garage. Valcambi is not just a gold refinery, it is the world's largest gold refinery. Based in Bengaluru, Switzerland, previously owned by Newmont Mining, the world's biggest gold mining company. The London Bullion Market Association had certified it. Global central banks trusted it. The Indian business press went absolutely berserk. Forbes also covered it, Fortune covered it, and here was an Indian company from Karnataka, not from some legacy industrial family, owning the world's most prestigious gold refinery now. See, the narrative was irreversible. Scrappy Indian entrepreneurs, congregate conquering the world now. Rajesh Exports climbed into the Fortune Global 500 at rank 423rd. The company claimed it processed 35% of the world's gold. Their reported revenues ballooned to the point where they were ranked 7th in the entire Fortune India 500. They were ahead of Tata Steel, ahead of companies you have heard of all your life. And in financial year 2021, Rajesh Exports reportedly posted revenues of 2.58 lakh crores. That's more than Reliance Industries in some years. That's more than the annual GDP of Bangladesh. Everyone was dazzled. Analysts, LIC, retail investors, nobody, and I mean nobody in the mainstream, stopped and asked the single most obvious question. If this company is generating revenues the size of a small nation's economy, why is its market capitalization barely 3,000 crores? Now that question, that one simple question, is the thread that unravels everything in this particular story. See, on March 11th, 2024, not a journalist, not a regulator, not a whistleblower with insider access, just one anonymous shareholder sends an email to SEBI. The complaint was almost boring in how routine it sounded. It said that the company has trade receivables that have been sitting unpaid for over 2 years. Now let me explain what that actually means, because this technical detail is actually the key to understand the entire alleged fraud. When a company sells goods, the buyer often pays later. Please understand this. That outstanding amount which is owed to you is what you call as trade receivable, which means money you are going to receive later, but trade you have made right now. It's completely normal. What is deeply abnormal is when those trade receivables, they age, and when they sit for 2-3 years without being paid. That is very abnormal, because that usually means one of the two things. Either the customer is in a serious financial trouble, then this would happen, or this is the darker possibility that the sale never really happened. You recorded revenue on paper and vanished. You booked the income, but no money ever actually changed hands. This is how you inflate reported revenues without a single rupee flowing into your bank account, and your revenues are inflated. SEBI did a preliminary check, found enough to launch a formal investigation on October of 2024, appointed BDO India Services, a forensic audit firm, to dig into these numbers. And what they found, if SEBI's interim order is accurate, goes beyond anything Indian financial regulators has ever encountered. And here's the corporate structure. Pay attention, because this is where the magic trick will happen. At the very top, Rajesh Exports Limited, listed on BSE, listed on NSE, audited every year, subject to Indian regulatory oversight. And below that is REL Singapore, a wholly owned subsidiary, described even internally as just a holding company with essentially no day-to-day operations. Below REL Singapore, there is Global Gold Refineries AG, abbreviated as GGR, a Switzerland registered entity, also described as a holding company. And at the very bottom of the chain, 3 chains are there. At the very bottom of the chain is Valcambi SA, the actual physical operational gold refinery with furnaces, workers, and real gold. 4 layers, from India to Singapore to Switzerland, which is GGR, and then Switzerland Valcambi. And now, between financial year 2021 to financial year 2025, 5 financial years, Rajesh Exports reported consolidated revenues of approximately 15.45 lakh crores. Out of this, nearly 97% and 99%, nearly the entire revenue of this company was attributed to its overseas subsidiaries, essentially to GGR and Valcambi. Now here is where the story detonates. Valcambi SA, the actual operating gold refinery, is audited by KPMG, one of the big 4 global audit firms, the most credible independent verification you can get. And according to Valcambi's own KPMG audited standalone financial statement, its revenues during the same 5-year period were somewhere between 427 to 743 crores per year. Not lakh crores, just hundreds of crores per year. Meanwhile, Rajesh Exports consolidated statements were attributing lakhs of crores annually to the same entity. The gap the SEBI has identified, Security Exchange Board of India has identified, and it is 15.15 lakh crores across 5 years. Now compare that to the scams we opened with. Satyam's Ramalinga Raju, India's most infamous accounting fraudster, inflated cash balances by 7,136 crores, and we called it as India's Enron. It became a Harvard Business School case study. What SEBI is alleging here is revenue misrepresentation at a scale that is literally 100 times larger than the Satyam scandal. And here is the most sinister part, the part that shows real sophistication. The alleged inflation wasn't parked at Valcambi, where KPMG would catch it. It was parked at GGR, Global Gold Refineries AG, the Swiss holding company sitting between REL Singapore and Valcambi. Now, GGR has no independent auditor. There was no KPMG, no Deloitte, no one independently verifying GGR's books. The revenues that made Rajesh Exports look like 7.78 lakh crore behemoth were sitting inside an entity that nobody with independent authority was actually examining. This is elegant in a very disturbing way. You build a 4-layer structure. You put the one entity that has real auditing will come be at the very bottom. You park your inflated numbers at an unaudited holding company one level above. And when Indian regulators look at your consolidated financials, they see astronomical revenues attributed to overseas subsidiaries and assume someone somewhere verified it. But nobody did. SEBI also flagged other red flags in the investigation. The company has recorded around 1,035 crores in investments in gold mines in South Africa. Now, when forensic auditors asked for documentation to support this, they couldn't produce it. The company also claimed over 11,000 crore worth of business with a stock brokerage firm called Affluence Shares and Stock Private Limited. Affluence's own response to investigators was blunt. Rajesh Exports was never their customer. They were never their customer. And Rajesh Exports is claiming 11,000 crore deal. Rajesh Mehta has denied all of this. In media interviews, he has maintained that SEBI order is interim, that no final verdict has been reached, and that the company's relationship with the Valcambi and the global gold market is real and legitimate. Now, the courts will decide, but the company still hasn't explained, at least nobody publicly has explained, why Valcambi's own KPMG audited report shows a fraction of what Rajesh Exports' consolidated accounts claim. Nobody could explain this. Now, let's talk about the elephant in the room, LIC, because this is where the story crosses from corporate scandal into a question about who is actually protecting ordinary Indians. When the Nirav Modi PNB scam broke in 2018, the immediate anger was directed at PNB, a public sector bank that had allowed fake letters of undertaking to be issued for years. The rage was actually justified, but the deeper institutional question was, how did this keep happening across multiple public sector institutions? Now, with the Rajesh Exports, the question lands squarely on LIC. LIC has held approximately 10.8 to 11.18% of Rajesh Exports since at least March 2023, and the data shows they were even consistently buying, not selling, even as the SEBI probe was underway. The stock peaked at 239 in December of 2025, and by June 4, 2026, it has crashed to 104, and by June 5, it was 98 rupees. Now, SEBI has estimated that the alleged fraud resulted in shareholders' wealth erosion was of around 12,726 crores. LIC's shares of that erosion at 11% is around 1,400 crores. That is policyholders' money. That is not LIC's money. That is policyholders' money. That is the savings of teachers, farmers, government clerks who pay LIC premiums faithfully every month because they trust the institution. Now, the opposition parties, of course, have attacked the government, alleging that LIC investment was not a coincidence, and the government hasn't fully responded to that framing, of course. But we don't know whether LIC's investment decisions here were driven by political direction or due to poor diligence or genuinely belief in the company's story. We don't actually know. But the question itself is, why was LIC increasing its stake in the company already when the investigation was going on? And it deserves a real and transparent answer, and the inquiry must be done. And here's the broader regulatory implication in India. In the Harshad Mehta case, the fraud was domestic. SEBI could give a subpoena to Indian banks. They could freeze Indian assets. They could raid Indian offices. In Satyam, again, everything was under India's jurisdiction. But in Rajesh Exports case, the alleged core of the fraud sits in a Swiss holding company called GGR. To forensically verify what happened there, SEBI needs legal cooperation from Swiss authorities. And as you know, cross-border investigation is usually slower, messier, and often inconclusive, as India learned painfully in Vijay, Mallya and Nirav Modi's extradition cases. This case is going to test SEBI's international enforcement reach in a way no previous Indian corporate scandal has. Now, let me give you the one idea from the entire story that I want all of you to hold on to. Every major Indian financial scam, it follows the same structural logic, not in the details, but in the principle. Harshad Mehta exploited the gap between what was written on a bank's receipts and what was actually verified. Under Satyam scandal, they exploited the gap between what was written in the books and what was actually in the bank. Nirav Modi exploited the gap between what the branch manager authorized and what headquarters actually knew. But Rajesh Exports, if SEBI's allegations are correct, exploited the gap between what an Indian consolidated balance sheet says about overseas subsidiaries and what those subsidiaries' actual independently audited book says. Every single time, the fraud is a gap in verification. If you see the chronology, a place where someone is supposed to check, but nobody actually does. The auditor of Indian listed parent, the firm that signs off on Rajesh Exports annual reports year after year, was technically signing off a consolidated revenues that rolled up from an unaudited Swiss holding company. Under Indian accounting auditing standards. The consolidation was seemingly compliant on paper, but compliant on paper is precisely how 15 lakh crores of alleged fiction survived for 5 years. India's Harshad Mehta movement gave us SEBI's modern framework which we see today. India's Satyam scandal gave us reforms to auditor independence, and India's IL and FS movement scam gave us a rethink of credit rating agencies, and each crisis have created a slightly better system. Now this Rajesh Exports case, if it proves to be what SEBI is alleging, will force India to confront the auditing of offshore subsidiaries of listed companies in India. And if we force regulators to ask who exactly is verifying the revenues of every Indian Fortune 500 companies whose numbers are 97% generated overseas in entities that no Indian auditor actually visits, the answer right now is often nobody. See, as we all know, Vijay Mallya was a colorful kingfisher billionaire who threw parties and defaulted on loans. We could see him, we understood the story. He borrowed money, he spent it and ran away. Nirav Modi was the jeweler to the stars. Priyanka Chopra wore his diamonds. We understood that story too. Fake guarantees, complicit banking officials, fraudulent paper trials. But Rajesh Exports is a very different kind of story. This is a company that sat in the Fortune Global 500, that was audited every year, that had India's largest state-owned insurer as a major shareholder, that operated in a sector that is gold that India holds sacred, and allegedly for 5 straight years, almost its entire reported revenue may have been a fiction, maintained not through back alley cash transactions or corrupt bank clerks, but through the sophisticated use of a multi-jurisdictional corporate structure with an unaudited Swiss holding company doing the heavy lifting. This is not a Bollywood villain story. This is a systems of failure story, and systems of failures are far more dangerous than individual villains, because you can arrest a villain, you can't arrest a gap in a regulation. SEBI's 109 pages are just the beginning. The forensic processes, the cross-border cooperation with Swiss authorities, the court proceedings, that will take years to come. But I want to leave you with one question, not about Rajesh Mehta, not about Rajesh Exports specifically. Right now, there are other Indian companies in Fortune India 500, maybe Fortune Global 500, whose revenues are overwhelmingly driven by subsidiaries in Singapore, Switzerland, Dubai, or the Cayman Islands. Subsidiaries that may or may not have independent auditors. Subsidiaries whose books may or may not reconcile with the consolidated accounts their Indian parent files every year with BSE or NSE. How many more Rajesh Exports are out there right now, waiting for one anonymous shareholder email to start pulling the thread? Drop your thoughts in the comment section, because the answer to that question is going to shape India's financial regulation for the next decade. And should SEBI go for all such companies one by one or not? Let me know in the comment section. I hope you gained a new perspective and you were able to understand the entire scam, alleged scam, which is alleged by SEBI against Rajesh Exports. Let's see what happens in future, and we'll be trying to cover that as well. Hope you have a great day. All the very best. Thank you.